Hello. Yeah. Very good morning, everyone. Everyone, are you all ready? Everyone fine? Is the voice is audible? Can you respond so that we can start? Now, today we are here to have a discussion on expected question for the upcoming exam, that is May 2023 exam for Consolidated Financial Statement chapter. Correct? So we'll have a discussion on that. Okay. You can see that already I have opened the expected question list for which the PDF is already provided to you. So I hope you have that PDF with you all. Can we start? Yes, sir. You can see how many questions are given. There are 12 questions I have given to you for which I expected from this chapter. So first I will take three very important questions which they may ask in exam. So let me take that first three questions. Then we'll come back to the balance question. Okay. Normally from this chapter, a question of consolidation will come for 15 marks. Are you getting? So there are three varieties of question have been given in ICAI study material. And out of three, normally they ask one question. Last attempt they have already asked a question on what? Chain holding. So I am expecting some other question this time. Come to question number, everyone, question number 32. Come to question 32. Sorry. Question 32 of question bank. My question bank. Come to question 5 of this expected question. Chalega? Yes, sir. Can we start? Yes, sir. You can see DF Limited acquired 100% ordinary shares of rupees 100 each of XYZ Limited on 1st October. So 100% shares, it means there is no NCI, non-controlling interest. On March 31, 2002, the summarized balance sheet of two companies were given below. You can see they have given DF, plant and equipment, property, plant, equipment, land and building, plant and machinery, investment in XYZ Limited, inventory, financial asset, trade, receiver, cash, equity share capital, other equity, other reserve, retained earning, financial liability, bank overdraft, trade payable. The retained earnings showed a credit balance of 3 lakh on 1st April 2001, out of which a dividend of 10% was paid on 1st November. So you can see opening balance of retained earning was given 3 lakh, out of which a dividend of 10% was paid, but it was paid on 1st November. Means can I say it was paid after acquisition, after date of acquisition? What is the date of acquisition? 1st October, and dividend was paid after acquisition? Yes, sir. DF has recognized the dividend received in profit and loss account. Can I say parent company will recognize dividend in profit and loss account only as per India's 27? So they have done correct accounting treatment in their separate financial statement. Now they have given fair value of plant and machinery on 1st October 2001 was 20 lakh. The rate of depreciation on plant and machinery is 10%. So can you see they have given one fair value adjustment for plant and machinery, and they have given rate of depreciation. We have discussed in our class that whenever question is silent, rate of depreciation is always based on RBM. So it is RBM, reducing balance method. Now if question is silent, you can't apply SLM, and if you are doing SLM, you might, the marks will be deducted. Correct? Yes, sir. Chalega? Then following are the increase on comparison of fair value as per respective Indias with book value as on 1st October 2001, which are to be considered by consolidating the balance sheet. You can see trade payable 1 lakh, land and building 10 lakh, and inventory 1 lakh 50,000. But when you read the question, you might do mistake. Means you can see they have given fair value of plant and machinery, but for all these three items of balance sheet, they have given increases. Following are the increases, means there are changes in the value, means they have given how much increase or decrease from fair value if we compare with the book value. So actually they have given what? The amount of increase only. So this is increase in trade payable, this is increase in land and building, increase in inventories. Then it is given, it may be assumed that inventory is still unsold on balance sheet date and trade payable are not yet settled. Whenever question is silent, we'll always assume that inventory remain unsold, means whatever inventory taken over from what subsidiary company on the date of acquisition, they remain unsold. Similarly, trade payable remain unsettled. This is our general assumption. Also assume that other reserve of both the company as on 31st March 2002 are the same as on 1st April 2001, means opening balance and closing balance of other reserve are same. Whenever question is silent, we'll assume that only. And all fair value adjustment have not yet started impacting consolidating post acquisition profit. So it means till now fair value adjustment has not been done. This is our general assumption. Same thing will assume even the question is silent. Prepare consolidated balance sheet as on 31st March 2002. So can we do it? Yes sir, we can do it. Correct. Now in this, whenever this type of questions come, where we need to prepare what? Consolidated balance sheet. First means we are doing question number 5. So first step is what? To fair value adjustment. So we'll apply fair value adjustment. Fair value adjustment. So can I say we have plant and machinery, then they have given land and building, and then they have given inventory, and then they have given trade payable. Correct. Can I say we'll compare fair value with the book value on the date of acquisition. So fair value of plant and machinery is given 20 lakh. Fair value is given 20 lakh. Correct. And you can see we want book value as on the date of acquisition, but they have not given book value as on the date of acquisition. We need to find out what is the book value as on the date of acquisition. Correct. This information is not given. But can I say for land and building, these informations are not given. It is not required also. Why? Because they have given changes in the value. So you can see for land and building they have given 10 lakh. This is required, and they have given this only. For inventory they have given 1,50,000. This is required, and they have given this only. And for trade payable it is 1 lakh and it is required, and they have given this only. But we need to find out these changes. For that we want book value on the date of acquisition, but they have not given book value on the date of acquisition for plant and machinery. Correct. It means we need to calculate it. You can see in the question they have given what? If you see plant and machinery, so 13,50,000 is the closing balance, and on these can I say already 10% depreciation has been charged. So can I say it become 90% of opening balance? If it is 90% of opening balance, so we can easily find out what is the opening balance of this plant and machinery. Correct. So can you see opening balance of this plant and machinery will be 13,50,000 divided by 90%. Correct now? Correct. I hope you have understood. 13,50,000 divided by 90%, that is equal to what? 15 lakh. So this become opening balance, but we want the book value as on date of acquisition, that is on 1st October, means after 6 months. So it means 6 month depreciation will be charged at a rate of 10% into 6 by 12 will do. That will be 15 lakh into 10% into 6 divided by 12 is equal to 75,000. So can you say book value as on date of acquisition will be 14,25,000. So it become 14,25,000. So if you can calculate this 14,25,000, you can find out what is the increase due to fair value adjustment. So you can see 20 lakh minus what? 14,25,000 is coming 5,75,000. 5,75,000. Understood? Have you understood this point? Have you understood? Correct. Now can I say we have a post acquisition period. So because of this fair value adjustment, there will be some impact. It will have some impact in post acquisition profit due to additional depreciation. Because of this fair value adjustment. Correct now. So it means Now we need to also find out additional depreciation. Correct. Now for land and building, you can see the rate of depreciation is not given. So for land and building, we'll assume that entire increase is related to only land portion. And can I say land is not a depreciable asset? So because land is not a depreciable asset, so if that assumption is taken, the entire increase is related to what? Land appreciation. Therefore, no subsequent adjustment is required for post acquisition period. Similarly, inventory, because it is given inventory remain unsold. So inventory is unsold, so it will not affect any post acquisition profit, because when inventory is sold, it will affect cost of sales. Are you getting? So because inventory remain unsold, no adjustment for this fair value adjustment for inventory in post acquisition period. Similarly, trade payable remain unsettled, so no impact on post acquisition period. I hope you have understood. Only we need to find out what will be the additional depreciation for post acquisition period for plant and machinery, because they have given rate of depreciation. Correct. So what we'll do, we'll find out additional depreciation. Correct. So can I say additional depreciation will be now calculated on fair value, means depreciation for post acquisition period will be now calculated on 20 lakh. But can I say subsidiary company has already charged depreciation for the 6 month on what? 15 lakh. So we can say in this way, 20 lakh into what? 10% into 6 by 12. This is coming how much? So it will be 2 lakh into 6 by 12 means 1 lakh. So this is the depreciation which should be charged by parent company for post acquisition period. But already, can I say, already subsidiary company has charged depreciation on 15 lakh for the post acquisition period, that is 75,000. What is the additional depreciation required? Additional depreciation is what? 25,000. You can see 25,000 is the additional depreciation for post acquisition period. So what is the net impact in the consolidated balance sheet? It is 5,75,000 minus 25,000 means 5,50,000. This is 10 lakh. I hope you are understanding. This is 1,50,000 and this is what? 1 lakh. This point have you understood? Normally student do mistake here only. First step student will do mistake. Correct? Have you understood this entire calculation? Please, can you respond? Can you respond, everyone? Have you understood this part? Now, if you have understood this part, then let us come to what? Next working note, point number 2. Next working note, we need to prepare statement of net asset. Of which company? Of subsidiary company. The statement of net asset of XYZ Limited. XYZ Limited. Correct? Yes, sir. Now, in this, what we write down? Date of acquisition, then date of consolidation, and our post period. Now you can see in the post period, we'll have two columns. One is for what? You can see there are two reserve. One is given retained earning, one is given other equity. Our date of acquisition is 1st October 2001 and the balance sheet date is 31st March 2002. Correct. So this will be one format which we need to what? Understand. Now first we write down equity share capital. Means here net asset will calculate by using equity approach. Equity approach means equity plus reserve and surplus will be net asset, means asset minus liability. Correct. So equity share capital how much given? Is given 20 lakh. So 20 lakh opening balance and closing balance is 20 lakh given. So it has been assumed that there is no changes in equity share capital during the year. Similarly, we have other reserve. Other reserve, they have given the question that opening balance and closing balance are same. Therefore, you can see 10 lakh is the opening balance and 10 lakh is the closing balance. So it means there is no difference. Yes, sir. And we have retained earning. Retained earning opening balance is given the question. How much given opening balance? You can see the opening balance was given the question. How much? 3 lakh. This was the 3 lakh opening balance on 1st April 2001. Correct. So this is 3 lakh. And closing balance of retained earning is given how much? So you can see closing balance is 8,20,000. 8,20,000. So it become how much? 5,20,000 is what? Retained earning difference. Have you understood? Correct. But you can see these all figure are not on the date of acquisition. These are not on the date of acquisition. These are on opening date. Means some adjustment is required for current year, because in current year some portion is pre-period and some portion is what? Post period. It means, can I say, this is the profit which is actually for 12 months, out of which 6 months is what? Pre, and 6 months is post. So out of this profit, some profit will be transferred to pre-period and some profit will remain in post period only. Understood? So what we'll do? We'll do that adjustment. So the total is coming how much? 20 plus 30 and 3 lakh, that is 33 lakh. Then 5,20,000, and this will become how much? This will become 38,20,000. Correct. But okay, this is the profit after dividend. From this dividend is already paid. So if you want to apply time adjustment on this, so we need to first calculate net profit. So what we'll do? We'll add final dividend paid. Final dividend paid. So how much dividend has been declared by the subsidiary company? 10%. It is 10% of 20 lakh. 10% of 20 lakh. 20 lakh is equity share capital. So 2 lakh is already paid. So this 2 lakh will be added back to this. So 5,20,000 plus 2 lakh, can I say it become what? Current year profit. It will become current year profit. And current year profit will be how much now? 33 lakh. 7,20,000. And what? This become 40,20,000. Understood? Understood. Now this current year profit will be allocated in pre and post period. Will apply time adjustment. Time adjustment will apply for 6 months. It will be 7,20,000 divided by 2. So 3,60,000 will be transferred from post column to what? Date of acquisition column. And once you have transferred, can you see now this will become net asset on the date of acquisition. So this first column will automatically become net asset on the date of acquisition. Understood? Yes sir, correct. So this is now 36,60,000. This is 3,60,000. Correct. And this become 40,20,000. 40,20,000. Got it? Understood? Have you understood this part? Any doubt? Have you understood? Now, can I say now we'll do fair value adjustment? Fair value adjustment. We'll apply fair value adjustment. Fair value adjustment. What is the fair value adjustment? Already we calculated for property, plant and equipment, means for plant and machinery. What is the increase on the date of acquisition? 5,75,000. So we'll do plant and machinery 5,75,000. And what is the additional depreciation during the next 6 months, means post acquisition period? It is how much? 25,000 minus karo, means that will reduce your post acquisition profit, and this will become 5,50,000, the net effect on the date of consolidation. Then we have land and building. Land and building, it was how much? 10 lakh, and there was no post impact for these. It will remain 10 lakh only. Then we have inventory. Inventory changes. So how much increase? 1,50,000, and because it remain unsold, no impact on post acquisition profit, and this will be 1,50,000. Then we have trade payable. Be careful, this is increase in trade payable, so this will decrease your net asset. Correct? So 1 lakh will be minus now, because increase in liability will decrease your net asset, but no impact on post period. So this will be 1 lakh minus. Got it? So this is how much? How much it is coming? Check karo. 36,60,000 plus 5,75,000 plus 10 lakh plus 1,50,000 minus 1 lakh. Correct? Is equal to, it becomes 52,85,000. This is 3,60,000 minus 25,000. This is 3,35,000. and this is 40 lakh 20,000. 40 lakh 20,000 plus 550 plus 10 lakh plus 150 minus 1 is equal to 56 lakh 20,000. It becomes 52 lakh 85 plus 3 lakh 35. Just cross check whether it is correct or not. Do sum together. So can you see this is actually the profit of post period 6 month, from which dividend has not been deducted, means dividend has not been deducted. So either you can reduce dividend right now only from this, or you can directly deduct dividend when you will do working note for other equity. So there are two ways. Normally in class sometime I deduct from this, or sometime I deduct from what, directly from other equity calculation. That you can do, correct now, that is not a problem. But ICAI is deducting from where? They are deducting from what? They are deducting uh, from other equity. So we can do that like that only. Understood? Correct. So this is profit of 6 months before deducting dividend. Before deducting dividend. Chalega. So this is one statement where normally student do mistake in fair value adjustment only. Normally I have seen student do mistake in fair value adjustment. I hope you have understood this point. Any doubt in this? Can you respond one by one? Have you understood this? Now it might happen in your class if you have done by some other faculty. They have done this statement two working. First they will do analysis of profit and then they will prepare statement of net asset. I have combined two working in one working only. Means I have combined analysis of profit of current year with the statement of net asset to save time in exam. Correct? So have you understood this? Can we proceed? Yes sir. Now third, we'll calculate goodwill. Calculation of goodwill or gain on bargain purchase. So first we'll find out fair value of consideration paid. Fair value of consideration paid. It is nothing but cost price of investment, which is coming how much? 34 lakh. 34 lakh. And can I say they have acquired 100% only? So because they have acquired 100%, so there is no need to find out fair value of NCI. So can I say I'm just writing. If suppose it is 80%, so we need to find out fair value of NCI. Means we need to find out value of NCI either by using fair value method or by proportionate share in INI method. Correct now. But in this case it will be 0. It is coming how much? 34 lakh. Yes sir. Understood. Any doubt? Now we'll do what? Fair value of INA will do. Fair value of INA. So let us calculate fair value of INA. Yes sir. Already we calculated fair value of INA. How much we have calculated? It is 52 lakh 85,000. 52 lakh 85,000. Correct? So minus will do fair value of INA, that is 100%, and that is 52 lakh 85,000. This amount. Correct? So 52 lakh 85,000. Correct? So this become gain on bargain purchase, and gain on bargain purchase will be transferred to capital reserve. So how much it is coming? It is coming 18 lakh 85,000. Understood? Have you understood? Then point number 4 we'll do other equity. Other equity. Other equity, what we write? We write down other reserve, retained earning, and NCI. But in this question NCI is 0%. So NCI will be 0. But it is quite possible in your exam question NCI may be 20% or 30%. Correct? Yes sir. So first we write on balance. First we write on balance. This is balance from parent company's balance sheet. So other reserve is how much? Check karenge. Other reserve is how much? It is given 24 lakh. And retained earning is how much? 5 lakh 72,000. This is nil. Now we'll do plus share in profit or loss. You can see From statement net asset, there is nothing in other reserve, only in retained earning, that is 3,35,000. So this 3,35,000 will be allocated to parent company NCI. Once again, NCI is 0%. So parent company share is 100%. So directly we write down 3,35,000. And then we'll do minus dividend received. Dividend received. So now we'll deduct dividend received by parent company. That will be deducted because that is a contra item. Can it is already added while calculating this profit? Whatever dividend received is credited to PL. Now that will be nullified, because can I say any amount received from subsidiary company is not an income, that will be cancelled. So dividend received is nothing but the entire amount. What is the amount of dividend received? That is how much? Dividend paid was 2 lakh. So received also 2 lakh because NCI 0%. So we'll do minus what? 2 lakh. Minus 2 lakh. Understood. So what is the other reserve? Other reserve is 24 lakh. And return earning is 5,72,000 plus 3,35,000 minus 2 lakh. That is 7,07,000. Have you understood this part? Bull. It is 7,07,000. And this is 0. So these are the 4 working note which is required. Once you have this working note, the main solution is what you need to prepare balance sheet and then statement of changes in equity. That I need to inform you, that will do from the solution only. But have you understood this much? Tata. Have you understood this much? Correct. Let us come to the solution. What? So you can see they have prepared balance sheet. Balance sheet first is property, plant and equipment. So can I say property, plant and equipment? I'll just give you the calculation how they have calculated. Property, plant and equipment, the formula is book value plus minus fair value adjustment. It will be 24 lakh plus 13 lakh 50,000 plus can I say plus there is a land and building also 15 lakh plus 18 lakh plus. So can I say for land and building how much increase? It is increased by 10 lakh. But for plant and machinery, the net increase what? 5,50,000. 5,50,000. Just total it will come same amount. Check kar lo. It is 15 plus 18 plus 10 plus 24 plus 13.5 plus 5.5. Dekho 86 lakh, correct. Then coming to inventory. Inventory is how much? It's 12 lakh plus 3 lakh 64,000 plus increase 1,50,000. It will come same. Check kar lo. Then trade receivable, it is 5,98,000 plus 4 lakh. 4 lakh, no adjustment is required. Then cash and cash equivalent, it is how much? 1,45,000 plus 80,000 and no adjustment is required for this also. Then equity share capital will remain 50 lakh only. Correct. Other equity, now other equity will be nothing but sum total of these two. So you can, the sum total of these two is coming how much? With gain on bargain purchase also, it is 24 lakh plus 7.07 means 7 lakh 7,000 plus. What is the gain on bargain purchase? That is 18 lakh 85,000, which is coming 49, which is coming how much? This is how much it is coming? 49 lakh 90,000. Same amount is coming. Correct. Then same thing you can do trade payable. Trade payable is also increased by 1 lakh and short term borrowing you can do. Okay. Then you need to prepare notes to account. Notes to account is very simple. You can just see how they have prepared notes to account. Now I need to only explain the statement of changes in equity. Normally in ICAI solution, the balance sheet whatever they are giving, that need to be supported by statement of changes in equity. Correct. Now as per ICAI solution, however they are not demanding it, but then also you need to prepare statement of changes in equity which need to support what balance sheet. Correct. In this statement, some assumption will be required. First, can I say we know that statement of changes in equity will be between two part: equity share capital and other equity. So first for equity share capital, balance at the beginning we write down and same will become balance at the end. So equity share capital, no discussion required. Now for other equity, can I say there are actually two component of other equity. So you can in exam you can only write down two component. One is retained earning, one is other reserve. Now opening balance will come as per the opening balance of what? Parent company. The opening balance you can see it is what? 24 lakh. And it has been assumed that what assumption has been done? Retained earning whatever opening balance is given, that is actually nothing but closing balance, means that is the profit earned during the year. So we have assumed that 5,72,000 is nothing but profit earned during the year. This assumption taken, the opening balance will be 0 and that will be 24 lakh. Understood? Because that, can I say that 5,70,000 is nothing but closing balance. So we have assumed that opening balance nil, to that 5,72,000 whatever is that given in the balance sheet, that is nothing but profit earned by parent company during that year. So you can see total comprehensive income is 5,72,000. Correct? Understood? Now from this, can I say we'll deduct dividend 2 lakh because it is inclusive of dividend, to minus dividend 2 lakh. Then we'll add what? We'll add profit attributable, means any profit of subsidiary company attributable to parent company, means only the portion attributable to parent company, not attributable to NCI. Correct now? So you can see total comprehensive income attributable to parent company is what? 3,35,000. And because we have a gain on bargain purchase, so you can add on one more column, capital reserve, and this gain on bargain purchase will be added यहाँ पे 18,85,000. You can see this will become what? Balance at year end, and this is the total which will go to what? Balance sheet. So this presentation you need to understand. However, the solution was very easy. Same question have been asked in exam, can be repeated once again in exam. Have you understood this? Bolo. In this question NCI was not given. Actually NCI should be taken, so I have taken wrong question actually in the expected list. But in exam they will pakka give NCI percentage. Okay, chalega? Any doubt? Have you understood? Correct. Now let me take one more question. You can see one more point, that their working note will be different from my working note. Working note can be different, don't worry. Working note, for working note we don't have any fixed format. For balance sheet we have format, for statement of changes in equity we have format. Working note can be done in any format, but whatever working note you are doing, that should give the same answer. So you can see our answer is matching, but the presentation may be different. So even though you are following some different format for working note, your marks will not be deducted. If you want, you can follow the format given by ICAI, it is your choice. Correct? But the answer remain same. One more. Question number 86 of my question bank. Question number 6 of this expected PDF. On 1st April 2017, A Limited acquired 80% of share capital of S Limited. On acquisition date, the share capital reserve and surplus stood at rupees 5 lakh and 1,25,000 respectively. A Limited paid initial cash consideration of 10 lakh. Additionally, A Limited issued 2 lakh equity shares with a nominal value of rupees 1 per share at a current market price of 1.80. It was also agreed that A Limited would pay a further sum of 5 lakh after 3 years. So 5 lakh will be paid after 3 years. Means this is deferred consideration. A Limited cost of capital is 10%. The appropriate discount factor is given first year, second year and third year 0.75. The shares and deferred consideration have not been recorded by A Limited. Means this is the special point in this question. Correct? Means what they are saying, this point and this point, no journal entry has been done. Means only the journal entry has been done for cash consideration 10 lakh. So you can see investment 10 lakh is coming. You can see the figures are given 1000, means 10 lakh is coming. Okay. Now they have given balance sheet. You can read the balance sheet. Further information on the date of acquisition, the fair value of S Limited plant exceeded its book value by 2 lakh. Once again, can I say increase in the value has been given? The plant had a remaining useful life 5 years on this date. Okay, sir. Now consolidated goodwill has been impaired by 2,58,000. A Limited Group value NCI using fair value method. On the date of acquisition, the fair value of 20% NCI is 3,80,000. You are required to prepare CBS and notes to account is not required. Thank you very much. They have given the question, notes to account is not required. Okay, sir. Thank you very much. Yes, sir. Now can we do this? Only the special point is this point. Got it? It means first we need to calculate PC in this, because PC is not given correctly. So working note number 1, we are doing question number what? Question number 6. Write down calculation of purchase consideration on the date of acquisition. Means it was paid on 1/4/2017. This is actually we are doing as per Ind AS 103. As per Ind AS 103. Correct. So how much cash consideration? Cash consideration is how much? It is 10 lakh. Then there is a deferred consideration. So how much it is? 5 lakh. After 3 years, we need to find out present value factor for 3 years, that is 0.75. So 5 lakh into 0.75 is equal to 3 lakh 75,000. Now because they have given discounting factor for 2 decimal, now can you use 4 decimal? Now you can't use 4 decimal. Chalega? Yes sir, already I have said many times. Then we'll need to find out fair value of equity shares issued. Fair value of equity shares issued. So they have said A Limited issued 2 lakh equity shares whose market price is 1.80. So it is 2 lakh into 1.80, that is 3 lakh 60,000. Correct. So this is coming how much? 10 lakh plus 3 lakh 60 plus 3 lakh 10 lakh plus 3 lakh 60 plus 3 lakh 75,000, that is 17 lakh 35,000. You can see 1735 in 1000 rupees, in 1000 you can convert. Chalega. This is working note number 1. Now working note number 2, you can do one journal entry. Normally I will suggest you do journal entry whatever has not been done. So can you see we need to pass some rectified journal entry. Rectified journal entry. Correct. So can you say on 1/1/2017, can I say we need to record this deferred consideration as well as equity share issued, but that was not recorded. If we record in separate financial statement, our investment will increase. Investment will increase with these two amount. Correct. It will be 375 plus 360, that is 735. To what? To, can I say deferred liability? Deferred liability, that is 375. Then 2 equity share capital. Equity share capital will be how much bata? It will be 2 lakh into 1 only, because it will be at nominal value is 200, and balance will be securities premium. Securities premium will be 2 lakh into what? 0.8. Understood? So 2 lakh into 0.8 is equal to 160. The total should be what? 735. Check kar lo, 375 plus 200 plus 160, 735. First journal entry, you understood? Now the date of acquisition was 1st April 2017. 1st April 2017. But they have given balance sheet as on 31st March 2019. Means 2 year has expired, already expired. So on this deferred liability, can I say we need to recognize interest expense also by applying what rate of interest? 10%. So can you say interest expense is also not recognized? If you have not recognized deferred liability, so of course you have not recognized interest expense. So on 31st March 2018, can you see there will be some interest expense, which is nothing but we reduce retained earning. Retained earning will be reduced by what amount? To what? Deferred liability. To deferred liability. So that will be how much? 375 into what? 10%. So 375 into 10% is equal to how much? 3.75. 3.75. Then again one more year, 31st March 2019. Same journal entry. Interest expense, retained earning, account debit to deferred liability. Correct. So now it will be 375 plus 3.75 into 10%, that is how much? 375 plus 3.75 into 10%. Sorry, this will be 37.5, my mistake. 37.5 na. It will be 41.25. 41.25. What is the deferred liability closing balance? Closing balance will be how much? It will be 453.75. This become closing balance. Correct na? Bol. Have you understood this point? Bolo. So if you have understood this, now the solution is very easy. If you can miss in exam, you can do mistake in these two working note only. If you have understood this, so what I will suggest that if you have done this journal entry, try to incorporate this journal entry in question only. So what you should come to the question and question, you should do the adjustment wherever required. So you can see investment increased by 735. 735. Then deferred liability is 375. You can add on deferred liability, the current liability, because now it is payable after 1 year only. So you can see it is 453.75 only, because closing balance you write down. Then you can see equity share capital will increase by 200. The equity share capital will increase by 200. Securities premium will increase by 160. 160. And retained earning will decrease. So retained earning will decrease by how much? It is 37.5. 37.5 plus 41.25, that is 78.75. So retained earning minus कर दे minus 78.75. Yes, this effect will be only in the books of parent company and no effect in the books of subsidiary company. So if you have understood this, now it is very simple. Now you can do as we have done in previous question. Correct. So now we'll do first fair value adjustment. Working note number 2. 3. Fair value adjustment. So fair value adjustment they have given only for plant. They have given how much increase. They have given how much? It increased by how much? It is given the increase by 2 lakh means 200. And now we'll do less additional depreciation for, can I say, for 3 additional depreciation for what? 2 means additional depreciation. This adjustment we are doing on the date of acquisition. On the date of acquisition. So post acquisition period is how many years? So this is the date of acquisition and this is the date of consolidation. The post acquisition period is 2 years na? Understood. So they have said what is the remaining useful life? 5 years. You'll do 200 divided by 5 into 2. Correct? 200 divided by 5 into 2. How much coming? 80. So the difference will be what? 120. Got it? Yes sir. Then working note number 4 will do Sona. Will prepare Sona statement of net asset. We write down date of acquisition, date of consolidation, and you can add on post. In post we have only what? Retained earning. Correct? We will start with what? Equity share capital. Equity share capital. So equity share capital, how much it is given? You can see 500 and retained earning is 300. Correct. So 500 retained earning, it is 300. Closing balance has been given. Closing balance has been given. Have you understood? Now it is given in the first para of the question that retained earning on the date of acquisition is reserved for West Limited on the date of acquisition was 125. So you can write on 125. The difference coming was 300 minus 125, that is 175. Correct? It is 625, 175 and 800. Now in this question there is no dividend adjustment. Actually we should apply 3 type of adjustment before time adjustment, if you remember. One is dividend adjustment, one is any adjustment for error, one is any adjustment for abnormal item. Nothing has been given in this question and there is no time adjustment only because the date of acquisition is at the beginning of the year only. Whenever date of acquisition is the beginning of the year, then we are not supposed to apply any time adjustment. Got it? Means this is nothing but net asset on the date of acquisition only. Have you understood this part? Only we need to apply fair value adjustment, to apply plus minus fair value adjustment for plant to increase by 200, Subsequently it is 80, so it become 120. 120. So it become 825. This is 175 minus 80 is equal to 95, and this become 920. Have you understood this part? Follow. Have you understood this part? Now we'll calculate goodwill. Again on bargain purchase. Working note number 5. Calculation of goodwill or gain on bargain purchase. Correct. We'll first find out fair value of consideration paid. Fair value of consideration paid. Already we calculated fair value of consideration paid. How much it is? How much? 173.5. Yeah, 1735. Sorry, in thousand. 1735. Correct. Now we'll do plus fair value of NCI. Fair value of NCI for 20% is given in the question. How much it is given? 380. It is given 380. Total is what? 1735 plus 380 is equal to 2115. And from this will minus what? Fair value of INA. How much fair value of INA? That is 825. 825 minus karenge. So minus 815 is equal to 1300. So 1300 is what? Goodwill. Have you understood this point? Follow. Have you understood this point? Correct. One minute. I think some calculation mistake we have done. This is 1735 plus 380, 2115 minus 825. It is 1290. My mistake. 1290. Chalega? Now, from this they have said in the question that there is an impairment loss on goodwill. So impairment loss will be what? Deducted. That is 258. So how much it is coming? Minus 258. So what is the carrying amount of goodwill? 1032. Correct. Now, can I say, whenever we apply fair value method to measure NCA, always we calculate full goodwill. So can I say we have calculated full goodwill, and whenever there is a full goodwill, this impairment loss will be allocated both to parent company and NCI. The impairment loss will be attributable to both parent company and NCI. This you have understood. Now next working note number 6. Will what? Other equity. Other equity we write down retained earning and NCI, or you can do separate calculation for this. Normally if you do together, it will be easy to understand. Balance. The balance we write down for retained earning from parent companies to parent company retained earning. Now be careful, retained earning of parent company will be what? It is 1400 plus 160 is premium. The premium will not come. So 1400 plus minus 78.75, or directly you can do 1400 then do adjustment. So better you write down 1400 as given where? In the balance sheet. Correct. And securities premium you can write down 160. NCI will be how much? It is NCI will be how much? 380. This is NCI initial value. Correct. Now you can do rectification of error na. So rectification of error, how much you should decrease? You should decrease 78.75. The retained earning will decrease by 78.75. Have you understood this part? Any doubt? Follow. Have you understood this part? Got it? Have you understood this part? Yes, sir. Now we'll write down share in profit. The share in profit, how much? The share in profit how much? Calculated 95. 95 ka 80% how much? 95 ka 80%, it is 76, and 20% is equal to 19. Got it? Very simple now. Understood? Then minus impairment loss you'll do. Impairment loss will be allocated. So 258 ka 80% how much? It is 206.40, and 20% is 51.6. Got it? Now you can find out balance. Balance coming how much? 1400 minus 78.75 plus 7 array 1400 plus, sorry, this is minus na, so minus 78.75 plus 70 minus 206.40, coming how much? 1184. It is coming 1184 na. 0.85. Understood? NCI will be how much? Is 380 plus 19 minus 51.6, that is 347.40. 347.40. Have you understood this part? Any doubt? Simple. Got it? I think this is not corrected. 1190.85, because I am doing fast now, so some mistake I am doing, but I hope you have understood this point. Yes, sir. Correct. So this is also simple. Now we can draw the balance sheet. Balance sheet is very easy. You can see balance sheet. Chalo, come to the balance sheet solution. You can see property, plant and equipment. The property, plant and equipment will be how much? Just come here. It will be 5500 plus 1500 plus, and there is one adjustment of plant. The plant will increase by how much? I think increase by 120. It is coming what? 7120. You can see 7120. Plant, property, plant, equipment. Then goodwill will come. Goodwill will come as per working note, that is 1032 already we calculated. Goodwill. So goodwill already we calculated. That amount will come 1032. Yes, sir. Correct. Then can I say current asset may inventory will come. Inventory no adjustment is there, so we'll do 550 plus 100, that is 650. Similarly, trade receivable no adjustment. Cash and cash equivalent no adjustment. Equity will come after adding 200. Similarly, you can see other equity may securities premium will come 160, NCI will come 347.40, other equity already we calculated 1190, non-current liability will be as per the information given the balance sheet, but current liability may can I say what will be added? Deferred liability will be added. So current liability will be how much? 1250 plus 453.75 plus 650 is coming 2353.75, is 2353.75. And in this question you can see they have not given statement of changes in equity. Why they have not given? Because they have not required notes to account, so they have ignored statement of changes in equity also. Correct? So if they require notes to account, give statement of changes in equity also, otherwise you can ignore statement of changes in equity in exam. Chalega? Have you understood this also? Correct. Now I like to take one more question of chain holding. Normally it might happen, because chain holding is very important concept for consolidation. It has been seen that in past also for two items simultaneously they have asked what chain holding question. So it is also very important. Let me take one question based on that. Chalega? So come to what? Question number 57. No, not 57. Question number 51. Question number 51. Given below are the balance sheet of a group company comprising LX Limited, MX Limited and NX Limited as on 31st March 2021. So these three questions are very important questions. Other questions are simple, you can do it by your own. But these three questions are very important. Normally this type of question are asked, and normally students do calculation mistake in this. I'm not saying that you have not understood this type of question, but in exam you do calculation mistake, and suppose your if initial working is wrong, it will affect each working, and therefore your balance sheet will be also wrong. So entire steps become what? Wrong. Got it? Yes, sir. Now you can see they have given LX, MX, NX. Whenever this type of question means it is a question of chain holding. You can see property, plant, equipment. You can see LX Limited investment has been done in the MX Limited 17 lakhs here 2620, and 9.6 lakhs here in NX Limited. MX has done investment in what? NX Limited. Then current asset, inventory, financial asset, trade receivable, bills receivable, cash in hand and bank. Then equity, share capital, other equity, reserve, retain earning, financial liability, trade payable, bills payable, MX Limited is given. So one thing is clear that MX Limited is given 55. Understood? This is bill payable of MX Limited. Means in the books of NX Limited, there is a bills payable for MX Limited. Means in the books of MX Limited, this bills receivable will include 55. So that will be cancelled. That will be cancelled. Chalega. LX Limited hold 85% shares in MX Limited, which were acquired on 1st April 2020. Means no time adjustment. And MX Limited holds 60% shares in NX Limited, which were acquired on 30th September. Means after 6 months. So it means 6 months we need to apply time adjustment. The following balance stood in the books of MX and NX. MX they have given reserve and retain earning on opening day. This is required. The parent company has adopted an accounting policy to measure NCI at fair value by applying Ind AS 103. The fair value is to determine by using quoted market price. The given market price of MX is 120 and 125 per share respectively. So fair value method will be used to measure NCI. Prepare consolidated balance sheet of the group companies. Super easy question, no adjustment only. Only in the chain holding one point you need to keep in mind that I will explain with the solution only. Got it? So can we do it? You can see in this question there is no fair value adjustment. They have not given any fair value adjustment. Yes, sir. Correct. So first in this question, we are doing question number 11. First we should calculate calculation of NCI. So one thing we are doing from LX Limited point of view, the calculation of NCI in MX. Can I see it will be 100 minus how many shares they have already acquired in MX? 85. So it is 15%. And in NX, can I see it will be 100 minus 85% of what? 85% of what? 60%. This will be what? NCI. Understood? So you can see 60 into 85%, that is 51. So 100 minus 51 is equal to 49%. If you can calculate this correctly, then chances of mistake is rare. But normally it has been seen that student made two mistake in calculation of NCI only. And if you have not understood this concept, can I say you will do mistake? So have you, if I hope you have understood, can I say through subsidiary company, they are controlling what? They are sub-subsidiary, because they are holding 85% in what? MX, and through MX they are also controlling what? NX. So their profit, their share of profit in NX will be 85% of 60%. Simple. Understood? Yes, sir. Correct. Yes, sir. So their profit will be 85% 60, means NCI profit share will be 100 minus what? 85% of 60%, that is now 49%. This is NCI share. Now we'll do what? There is no fair value adjustment given in the question. Directly we can do SONA. So now we need to prepare two SONAs, two statement net asset. So first let us prepare for NX. Let us prepare for NX. Chalega? Yes, sir. Yes, sir. So NX, you can see we write on date of acquisition. Date of acquisition. Then we write down what? Date of consolidation. Then in post we write down what? Reserve and retain earning. Date of acquisition for NX is what? 30th September 2020. Balance sheet date 31st March 2021. Let's start with equity share capital of NX. So equity share capital of NX is how much? 1600. Opening balance and closing balance will be same. Then we write on reserve. Reserve opening balance, it is given. How much given? So opening balance is given as an additional information. It is 520. And closing balance is given how much? It is reserve. It is 580. The difference is coming how much? 580 minus 520. That is 60. Similarly, there is retained earning. Opening balance how much? 150. Closing balance how much? 310. So 310 minus 150 is equal to how much? 160. Correct. Total is what? 1600 plus 520 plus 150. That is 2270. 2270. Are we able to understand? So this statement net asset is same in every question. There is no changes. So there is nothing to explain in this. Correct now? Yes, sir. Now, everyone, everyone. Now, once again we need to apply time adjustment because this is 30th September. So we need to apply time adjustment. Whenever you are applying time adjustment, think about three adjustment before time adjustment. Whether there is any final dividend, no final dividend, there is no abnormal item, and there is no error in the books of accounts. Correct now. So no adjustment is there. So now we'll do plus minus time adjustment for 6 months. 6 months, 6 by 12 will do. So this will be 30. This will be 80 minus, and this will be transferred to pre-period. So it become 110. Have you understood this? So this is 2270 plus 110. That is 2380. This is 30 and this is 80. And this remain 2490. Done. There is no fair value adjustment in this question. Yes, sir. Similarly, we'll do Sona of what? MX. Let us come to date of acquisition. Post. Here also reserve and retain earning. Then date of consolidation. Now in this there is no time adjustment because the date of acquisition is 1/4/2020. This is 31st March 2021. So can we start with equity share capital? How much equity share capital of MX? They have given 2000. 2000. 2000. Then reserve opening balance how much? 760. Closing balance how much? Reserve. It is 810. So you can see 810 minus 760 is equal to 50. And retain earning, opening balance how much given? 480. Closing balance how much given? It is 600. These all figures I am taking from balance sheet. Huh? So 600 minus 480, it is coming 120. Now in this question, in this MX, so there is no time adjustment. Total become how much? 2000 plus 760 plus 480. That is 3240. This is 50. This is 120. And this will become 2000 plus 810 plus 600. That is 3410. Means you can cross check 3240 plus 50 plus 120. You can see I am also cross checking in exam. If you are doing in this way, also doing this way so that you can cross check whether you are doing some mistake or not. Chalega. And this, there is no time adjustment, there is no favor adjustment, that this become the answer. Correct. Now point number 4. Correct. Now we'll calculate goodwill or gain on bargain purchase. So goodwill or gain on bargain purchase. Okay, we need to calculate for MX and NX separately. So first, can you give me fair value of consideration paid? Fair value of consideration paid. So fair value of consideration paid, we are now calculating from parent company's point, means LX point of view. Fair value of consideration paid for this is 2620. 2620. But for NX, can I say whatever investment is coming out of 1350, only 85% belong to what parent company? So we'll take 85% of 1350. 85% of 1350. This have you understood? So we'll take 85% of what? 1350. This you need to understand. 1350 into 85%. How much? 1147.5. Have you understood this? What we have done? So we are calculating goodwill or gain on bargain purchase from LX point of view. So LX, if you are taking investment, means how much consideration has been paid to obtain control over NX. So you think from what? Parent company's, ultimate parent company's point of view. Correct? So they are holding 85% in MX. So 85% of investment will be the what? Consideration paid to obtain control over what? NX Limited. Chalega? Bolo. This, have you understood what I am saying? Now we'll do minus, plus fair value of NCI. It is given fair value method. Fair value of NCI. Correct. So you need to first find out how many total number of shares. So total number of shares in MX is how much? MX. You can see it is given 2000. So 2000 divided by 100. So we can say 20. Correct. Now NCI is 15%. So we'll do 15%. And what is the fair value? So fair value they have given for MX is 120. 120. So it is 20. Correct now. 20. This is 20 lakhs. 20 lakhs shares. Okay. This is not 20. 20 lakhs shares. So we have calculated what number of shares from the face value given in the question to 2000 divided by 100. We have done to 20 lakhs into 15% NCI into 120. 120 is the market price given in the last para of this question. Correct? You can see 120 has been given now. This 120. So what we have done, 2000 divided by 100. Correct? Yes, sir. Into 15%. So 20 into 15% into 120. It is coming 360. Similarly, we'll do for NX. NX it is 1600 to 16 into 49% into what? 125. So 16 into 49% into 125, that is 980. Have you understood this part? So this is how much? 2620 plus 360, that is 2980, and 1147 plus 980, that is 2127. Now from this will minus fair value of INA already calculated. So fair value of INA is how much? So for MX it is 3240. 3240 on the date of acquisition, and for NX it is 2380. It is 2380. So how much gain on bargain purchase? This is 2980 minus 3240. How much is coming? 260 negative. And this is 2127 minus 2380. This is 256 negative. Means this is total gain on bargain purchase. What is the total gain on bargain purchase? This is 256 plus 260. How much? 516 is the total gain on bargain purchase, which will be transferred to what? Capital reserve. So have you understood this part? Bolo. Have you understood? Correct? Plus, I think 1 minute. 1147.5 plus 980. 2127.5. I have not written 0.5 minus 2380, coming 252. 252.5. So 252.5, 250, 252.5 plus 260, it is coming 512.5. Okay, 512.5. This is your gain on bargain purchase. Got it? But have you understood this calculation? Calculation you need to just find out calculation. If you have understood this, then no trouble. Correct? Now coming to next point. Point number 5. Now we'll find out other equity. Other equity. Other equity may we have what? We have reserve, we have retained earning, and we have NCI. NCI we can do separately for what? MX and NX separately, or we can combine also. Understood? So first, can you give me balance? Balance for reserve and retained earning we take from parent company's books. Correct? So can you give me first balance is coming how much? balance is given how much? You can see reserve, it is 1150 and 1030, 1150, so 1150 and 1030 चलेगा. And NCI MX is how much? 360 and 980. We write down 360 and 980. Correct? Yes, sir. Now we'll do plus share in profit of MX. So in this we have reserve and retain earning. Understood? So how much reserve we have? Check karo. It is 50 and 120. Write down 50 and 120. Percent is what? 85% and 15%. So 50 into 85%, it will be 42.5. Add here, correct, and this will be 7.5. Add यहाँ पर. Understood? Similarly 120 into 85%, this is 102 will be added यहाँ पर, and 18 will be added यहाँ पर. Correct. Then similarly we'll do share in profit of NX. Same thing we'll do reserve and retain earning. So what is reserve and retain earning? Check करेंगे. It is 30 and 80. 30 and 80. 30 and 80. Now percentage is 51% and 49%. So 30 plus 51%. It is coming 15 point. How much? 30 into 51%. 15.3. Then this is 14.7. So add in NX 14.7. Then 80 into 51% is 40.80. And this will be how much? 39.20. Correct. Understood. So this become what calculation? So first, can you give me this total? 1150 plus 42.5 plus 15.30 plus 40.80. Correct. Now become 124 12 once again 1150, sorry, 40.80 will come यहाँ पर. So 1150 plus 42.5 plus 15.30 coming 1207.8. Then 1030 plus 102 plus 40.80, it is coming 1172.80. Similarly we'll do 3690 plus 7.5 plus 18. It is 360. What I am writing रे. चलो ठीक है 360. So this 360 plus 7.5 plus 18, 385 point, coming 385.5. This 980 plus 14.7 plus 39.2. How much it is coming? It is coming 1033.9. Up to this miscalculation you can do. Now only one point. This MX, just try to understand. This is actually overvalued. Why it is overvalued? Because just try to understand. You have taken for this calculation, means if you have taken this, you have taken 85% of this. Means you have taken 85%. It means till now you have not taken 15% of this investment. 15% of this investment, and can this 15% of this investment is actually belong to NCI. Belong to NCI na? I hope you understood it. But when you are deducting here fair value of INA, you have taken what? Total fair value of INA. Total fair value of INA means some difference will come for 15% of what? 1350. So because of that reason, what we'll do? From this we'll do minus. What minus will do? NCI share of investment, we'll say NCI share of investment in NX Limited, that is 15% of 1350. So 1350 into 15%, you can see we'll deduct what from these. 1350 into 15%, we will deduct 202.50, and this balance will come how much? 385.5 minus 202.50. It is what? How much it is coming? 385.5 minus 202.5, that is 183. So this NCI will become what? NCI in MX will be 183 and this will be 1033.99. So this become total NCI. This total NCI will come in the balance sheet. So only two adjustment if you have understood. One thing, so while taking PC, you take 85%, and whatever you have not taken 15% of that, you deduct while calculating NCI for MX. Got it? Understood? Balance all thing remain same. Balance everything remains same now. Got it? Bolo. Have you understood this point? Bolo. So these three question is from my point of view is very important, where you can do some calculation mistake not in calculating plus minus you can do correctly, but taking wrong information from the question only. If you can avoid that, it means you can do correctly. Got it? Any doubt? Have you understood this point? So three big questions I have done for consolidation. Yeah. I like to take one more question, which I am expecting this time. The question of loss of control. This question. Question of 48. Question of 48 of question bank. Question number 3 of expected question. What is given? As at the beginning of current financial year, AV Limited hold 90% of equity interest in BC Limited. During the financial year, AB Limited sells 70% of equity interest in BC Limited to PQI Limited for a total consideration of 56 crore. So 70% has been sold, means loss of control, and consequently loses control of BC Limited. At the date of disposal, fair value of 20% interest retained is 16 crore, and the net asset are fair valued as 60 crore. So net asset on the date of loss of control is 160 crore. This net asset include the following. You can see this net asset include the following asset and liability. So they have said debt investment classified as FBTOCI of rupees 12 crore and related FBOCI reserve is 6 crore. So related FBOCI reserve is 6 crore. But can you say out of these 90% belong to parent company and 10% belong to NCI? So 90% means 6 into 90% means 5.4 will be in balance sheet and 10% will be automatically adjusted with NCI. Similarly, net defined benefit liability of 6 crore that has resulted in reserve resulting in net measurement losses of 3 crore. So out of this 90% is 2.7 crore. Equity investment considered not held for the trading of 10 crore for which irrevocable option of recognizing the changes in fair value in FBOCI has been availed and related FBOCI reserve is 4 crore. So 90% is what? 3.6 crore. And net asset in foreign operation of 20 crore and related foreign currency translation reserve of 8 crore. 8 crore ka 90% how much? That is 7.2. Have you understood what I am saying? So just try to understand what India says, that whenever there is a loss of control, so we should recognize consideration received, and whatever investment has been retained, that will be also recognized at fair value. And we should de-recognize the INA at carrying amount. We should de-recognize the goodwill or any capital reserve, that is gain on bargain purchase, at what? Carrying amount only. We should also de-recognize the NCI at carrying amount. After this, just try to understand what they want to say, that if there is some cumulative gain or loss which has been accumulated in separate company equity for subsidiary company, means any cumulative gain or loss of subsidiary company which has been accumulated in separate company equity will be also what? De-recognized as per respective Ind AS. As per respective Ind AS means this FBOC reserve of debt instrument, can I say as per Ind AS 109 it will be reclassified to PL. So this will be reclassified to PL. Then remeasurement losses will not be reclassified to PL, it will be transferred to retained earning directly. Similarly, any FBOC reserve for equity investment will not be reclassified to PL, it will be directly transferred retained earning. And FCTR as per Ind AS 21 will be reclassified to PL, means that for this you need to have an understanding of respective Ind AS. So what journal entry will do, that I am giving. So journal entry what? Let's see what is journal entry. Correct. The first journal entry what? How much consideration you have received? Bank. How much consideration you have received? So you have sold what? Out of 90% you have sold what? 70%. For what? For how much? 56 crore. Then investment will come, retained portion will come. How much is the fair value? That is what? It is 16 crore. Correct. Understood. Can I say NCI will be also debited at carrying amount? So total net asset is, they have given 60 crore. So 60 crore into 10% will be 6 crore. This will be NCI on the date of acquisition. This is the net asset. Correct. And to INA will be also de-recognized. So this INA they have given 60 crore. This will be, we'll assume that this is inclusive of goodwill etc. Correct. Now and all the investment whatever has given in the as below, whatever, that is inclusive of that. So that is 60 crore only. Have you understood this part? Correct. Are you able to understand what I am doing? Correct. Yeah. Now the difference will be what? To gain on disposal, which will be transferred to PL, that is coming 60 minus 56 minus 16 minus 6, that is 18. This is the first journal entry. Then second journal entry is for FBOCI reserve for debt instrument. So that will be reclassified to PL. So we'll say FBOCI reserve, because it will be reclassified from OCI to PL. So PL means this will be also gain and this will be transferred to PL. How much amount? Amount already we calculated. How much is the amount? It is, they have given 6 ka 90%, 3 point, the 6 ka 90% is what? 5.4. It will be 5.4. Similarly, we have one remeasurement loss. Remeasurement loss, correct. Now we can say this is nothing but remeasurement reserve, correct. So that is loss, so it will be now credited, correct. Now so what journal entry will do? Retain earning, means it will not be reclassified, it will be adjusted directly with retain earning to what? Remeasurement reserve as per Ind AS 19. This amount is 3 crore ka 90%, 2.7. Then we have one FBOCI reserve for equity. So that is also one reserve, but it will not be reclassified to PA. It will be directly transferred to what? Directly transferred to retain earning. Retain earning, how much it is? 4 means 3.6. 3.6. And last, there is what? FCTR. So FCTR will be also reclassified from OCI to PL. OCI to PL as gain only. Gain transfer to PL. So this will be how much? 8 means 7.2. 7.2. It means what is the total gain? Total gain is what? 18 plus 5.4 plus 7.2. So this total gain will appear in PL. Understood? Have you understood this part? I hope you have understood. This is very simple question but can be asked in exam. Can be asked in exam. So of course now we can do it. So these were the 4 questions which we were supposed to discuss today. One question have been asked, how many marks we expect from your important question list? Please reply. There is a shortage of time. Although it's true that it's difficult to predict, but still can we expect 70 plus marks? Just try to understand. I will not give any guarantee that how many marks will come. But as per the past trend, means past attempt trend, whatever expected question I have given from that, normally 70% marks means it will more than 70% only. But I will not give any commitment. Anytime anything can change by ICAI, correct? But as per my expectation or as per past experience, it can be said that 70 means 60 to 70% will definitely come. Will definitely, I will not say may come, may means there is a higher probability, but there is no virtual certainty. So there is a higher probability that yes, it may come, but there is no virtual certainty for this. Understood? Correct. Yeah. Understood. So I was just supposed to discuss these 4 questions. The balance question I can see that you can do by your own. My help is not required. Means you can see question number 1 is for what? Is a question which is related to exemption for consolidation. This theoretical question you can read by your own. Then there is a question number 2 is for definition of control. Definition of control. This also you can read by your own. This is also very good question. Can be asked. Me, this was a question given in RTP till now not asked. So can be asked in exam. Correct? Normally this type of question they don't ask, but because special type of question I'm expecting this type of question in exam. Correct? Then this question 4 is also a simple question where they have given what? A consolidated balance sheet, and they have given what? Group carrying amount of subsidiary company which is included here. So this is also a question of loss of control. So when you are doing loss of control, this all asset will be de-recognized. So you need to only prepare a post balance sheet after that. Very simple, you can do it by your own. Chalega? Means my help is not required if you know the concept. Okay. 5 already I have done. 5 already I have done. 6 also I have done. Correct. 7 is a question of what? Non-controlling interest. So as per Ind AS 110, now NCI can have negative balance. So if the post-acquisition loss, the share of post-acquisition loss of NCI is more than carrying amount, so then also it will be attributable to NCI. So that is given by way of question. It is very simple. A Limited acquired 70% of equity shares on 1/4/2001 at a cost of rupees 10 lakh. When B Limited had an equity share capital of 10 lakh and other equity 80,000. So you can see 10 lakh 80,000. 10 lakh 80,000. This become INA 10 lakh 80,000. In the 4 consecutive year, they fared badly and suffered loss of these respectively. Thereafter, in the next year, they have earned a profit of 50,000. In the next year, then again profit of 1 lakh and 1 lakh 50,000. So the NCI and cost of control means goodwill at the end of each year. Then due to losses, goodwill will not change. So goodwill remains same. Whatever we have calculated at the beginning, so can you see you can calculate goodwill in this way. What is the PC is 10 lakh? Then just we need to find out the value of NCI. Proportionate method we can do. You can see INA is 10 lakh plus 80,000 by net asset approach. So 10 lakh 80, so 10 lakh 80 into we can say 30%. So 30% is coming 3.24 and then minus 10 lakh 80,000. How much it is coming? 10 plus 3.24 minus what? 10.80, that is 2 lakh 44,000. You can goodwill is coming 2,44,000. Every year it will remain same. Every year it will remain same. Correct. So now only I need to explain how to calculate NCI at the end of each year. Correct. You can see opening NCI was 3,24,000. 3,24,000. Then first year loss is 2,50,000. You get 2,50,000 into 30%, how much? There is 75,000 deduct. So it become 2,49,000 closing balance of next year. Then next year profit loss is 4 lakh. So 4 lakh into 30%, how much? 1,20,000. So once again we'll deduct 1,20,000. You can see balance is 1,29,000. Same thing we'll do for the next year also. It's very easy. It is 5 lakh. 5 lakh का 30% is what? 1,50,000. So you can see if you deduct 1,50,000, it will become negative 21,000. So this negative 21,000 will appear in the balance sheet. Means NCI can have negative balance. That I want to say. Correct. Then again it is 1,20,000. 1,20,000 30% is 36,000. So again we deducted 36,000 and NCI become 57,000. Then they started earning profit. So whenever profit added, so share of profit will be added. You can see share of profit added, and at the end it will become positive NCI. It's very simple. Can be asked in exam for 4 marks or 5 marks, whatever. Okay. So of course you can do it. Correct. Understood? Now, then one more question they may ask. What is the question? About a change in the status. So normally what happens? If an entity is an investment company, so it is exempted from consolidation. But it is quite possible the nature of investment entity change subsequently and then it is not exempted from consolidation. So what will happen if that change happen? So what is the question? A Limited ceases to be an investment entity from 1st April 2001, on which date it was holding 80% of B Limited. The carrying value of such investment in B Limited, which was measured at fair value through PL, was 4 lakh. The fair value of NCI was 1 lakh. The fair value of subsidiaries INA was how much? 4,50,000 on the date of change in status. Determine the value of goodwill. So, once they are ceases to investment company, now consolidation is required. So from the date of change, we'll apply consolidation requirement. It means on the date of change, we'll calculate goodwill again on bargain purchase. Now the fair value of investment will be considered as what? Fair value of consideration. You can see the deemed consideration will be equal to fair value of investment on the date of change, that is 4 lakh, and fair value of NCA is given how much? 1 lakh. From this fair value of mine INA will deduct, and this is what? Goodwill. So goodwill is calculated on the date of change of status only. Very simple. Understood? 5 marks question can be asked from this. Journal entry will be INA account debit 4,50,000. Investment will be recognized at 4 lakh. NCA will be recognized at 1 lakh and goodwill will come 50,000. Understood? Right. Then one more question. Question number 9. Question number 9. This question is for Ind AS 28 equity method. Good question. What they are saying? Sumeru Limited hold 35% of total equity shares of Meru Limited, an associate. The value of investment is 3 crore in the consolidated statement of Sumeru Limited. Sumeru Limited sold goods worth rupees 3,50,000 to Meru Limited. So S Limited sold goods worth rupees 3,50,000 to M Limited. Correct? The cost of goods sold is 3 lakh. Out of these goods worth rupees 1 lakh were in the closing stock of Meru Limited. Correct? So out of these goods worth rupees 1 lakh were in the closing stock of Meru Limited. During the year ended, the profit and loss statement of Meru Limited showed a loss of 1 crore. What is the value of investment in Meru Limited as on 31st March 2019 in the consolidated financial statement of Sumeru Limited? The equity method is adopted for valuing investment in associate. Very simple. So can I say what is the value of investment on 31st March? It is given 3 crore. Then whatever loss, means share in loss, will be adjusted. So we'll do minus share in loss. Loss is what? How much? It is 1 crore. 1 crore ka 35%. You can see minus share in loss, post acquisition loss, 1 crore ka 35%. 35 lakh will do. Now there is one transaction between Sumeru means S Limited and M Limited. So S Limited sold goods worth rupees 3,50,000 to M Limited. Correct? Means, can I say the stock of M Limited has the stock of M Limited has some goods which has been purchased from what, Sumeru Limited. So can I say it is nothing but one type of downstream transaction? Downstream transaction, or we can say the stock of Meru Limited includes some profit of what? Investor, includes some profit of investor. Now when I am saying stock of Meru Limited, so that stock is nothing but included in investment. So can I say if that stock include profit, unrealized profit, so investment also includes some unrealized profit. Investment also includes some unrealized profit. So we need to eliminate that what? Profit from that investment. I hope you are understanding. Correct now. So we need to eliminate that profit. What journal entry will do? We will decrease investment. We will decrease investment. Understood? Correct now. So what you can see, unrealized gain on inventory left unsold with Meru Limited. We need to decrease investment only. So for any downstream transaction, will pass one journal entry, retain earning account debit to what? Investment. Retain earning account debit to investment. Got it? Correct. Now how this amount will be calculated? Just try to understand. You can see the goods were sold at 3,50,000 and cost of goods sold is 3 lakh. Means profit is 1,50,000. 1,50,000. So 1,50,000 divided by 3,50,000. So you can see there is a profit percentage of 42.85%. So of course, this 1 lakh will be sale price only. Sale price 1 lakh will be the sale price of S Limited and cost price of what? M Limited. Are you getting what I am saying? Means this 1 lakh include profit of S Limited. So what we will say, 1 lakh into 1,50,000 divided by 3,50,000. This is the unrealized profit. So 1 lakh into 1,50,000 divided by 3,50,000. You can see it is how much it is coming. 1 lakh. The total unrealized profit, then we need to do 35% also. 1 lakh into 1,50,000 divided by 3,50,000 into 35%. It's coming how much? अरे क्या हो रहा है? 1 lakh into 1,50,000 divided by 3,50,000. Correct? Into 35%. It's coming how much? 15,000. Understood? So you can see they have taken two assumptions in this. They have taken two assumptions. Oh, sorry. It's 3,50,000 and 3 lakh. Why I have taken 1,50,000? Oh, so I will explain like this. Correct. 1 minute. 1 minute. Can I say this Sumeru and this is Meru? So goods worth rupees means the cost price, whose cost price is 3 lakh, has been sold at what? 3,50,000. The profit is actually 50,000. I was actually taking 1,50,000. Pata nahi what happened to me. Correct? And now this become what? The cost price. Out of this 1 lakh remain unsold. 1 lakh remain unsold. Okay, this 1 lakh will include some unrealized profit of Sumeru Limited. So how much unrealized profit that we need to calculate? So we will say 1 lakh, the profit is what? 50,000 divided by 3,50,000. Correct? And this is the total profit, but we need to eliminate only 35%. So how much is coming? 1 lakh into 50,000 divided by 3,50,000 into what? 35%. It is coming 5,000. 5,000. So they have taken two assumptions. First assumption, can I say it can be the sale price, because question is silent. It can be sale price of Sumeru Limited. Or can I say it can be the cost price of Sumera Limited also? But can I say if question is silent, always will assume that it is the sale price of Sumera Limited. Correct now? Because this is included in this. And if this is sale price of S Limited, so this 1 lakh will be also sale price of S Limited only. That is the better assumption. But they have given two calculation because question was silent. I will say the first assumption was not, it is not appropriate assumption. Correct? So from my point of view, this answer is more correct. You can see this answer is more correct. You can see 5,000 from my point of view. Correct? So that you can do, or you can find, you can also assume that this 1 lakh is what cost, so you'll do 50,000 divided by 3 lakh you'll do. But have you understood this calculation? So the answer will be this. Answer will be this. One more, they have given one more point. Will your answer be different if the Meru Limited had earned a profit of 1.5 crore and declared dividend? So can I say once again the same solution, only now sharing profit will come and will do minus dividend received. So 75 lakh into 35% will do. Same thing has been done. Check karo. This profit share, this is what annualized profit, and this less dividend, answer will come. This type of question may come in exam. Got it? Understood? Have you understood? Yes, sir. Correct. Then let us come to question number 10. This is of joint venture. Joint venture means it is for joint operation. I think the question is of joint operation. Okay, can we take this question? On 1st April 2017, Alpha Limited commenced a joint construction of property with Gamma Limited. For this purpose, an agreement has been entered into that provide the joint operation or ownership of the property. All the ongoing expenditure comprising maintenance plus borrowing cost is to be shared equally. The construction was completed on 30th September 2017 and the utilization of property started on 1st Jan 2018, at which time the estimated useful life of the same was estimated 20 years. The construction was completed on 30th September 2017. It was completed on 30th September 2017 and it was put to use on 1st Jan 2018. This is bakwas. And can you see useful life of the same was to be 20 years. The 20 years will be from the date when the asset is ready for use. From date when the asset is ready for use. Correct. The total cost of construction is 40 crore. Beside internal accrual, the cost was partly funded by loan of 10 crore on 1st Jan 2017. 1st Jan 2017. The loan was taken on 1st Jan. But construction commenced from 1st April 2017. Means it will be capitalized from 1st April only. Yes, sir. The loan carries an interest of 10% and is payable at the end of each year. The company has spent 4 lakh on maintenance of such property. The company has recorded the entire amount paid as investment in joint venture in the books of account, such as the suitable accounting treatment. So what India's 111 says that whenever there is a joint arrangement which is unstructured, then it will be always a joint operation. So of course, can I say from the question, you can see Alpha Limited commenced joint construction of property with Gamma Limited. So it is an unstructured arrangement. Therefore, it will be always joint operation. And for joint operation, the proportionate share of asset will be shown in respective books of co-venturer. Proportionate share of expense will be shown in the respective books of co-venturer. Means you can say joint operator. Correct? So in this, you can see what is the total cost of construction 40 crore. So 40 crore will be 20 crore, 20 crore. Understood now? But can I say in this 40 crore, we need to first capitalize borrowing cost. So borrowing cost will be what? For 10 crore loan into 10%. But for how many months? Month will be started from what? 1st April and it will be up to 30th September. Means 6 months. So 6 months has been capitalized. So total is coming 50 lakh. It is coming 40 crore 50 lakh. This 40 crore 50 lakh will be divided by 2. It is coming 20 crore 25 lakh. Can I say on this 20 crore 25 lakh, we should also calculate depreciation. So depreciation has been charged for the year ended 31st March 2018 from 30th September only. So you can see 20 year is the life and 6 by 2 the total depreciation is the total depreciation, correct now. So depreciation charge, the total depreciation is coming what? This amount. But out of that 50% will belong to what? Both the company. So this become what? The depreciation share. And similarly, there is a maintenance cost of 4 lakh. The maintenance cost will be also shared equally. And similarly, borrowing cost for the balance 6 months will be also shared equally. So can you see, you can calculate and you can find out what will go to SOPL of the respective companies and what will go to balance sheet of respective companies. Understood? I hope you have understood. Correct? Yes, sir. Just read it, you will get the answer. Correct? This also you have understood. This already we have done. This very simple question of what? Once again, it is a question of what joint operation. You can read, you will understand. Correct now. So with this, you can see all the discussion of consolidation question has been done. Correct now. I like to take one more question. One question actually I forgot to add. So I will like to take that question also. Why I have not added that question? I think, oh, actually that is a question of what business combination. Achha, that is added in business combination chapter. Means that is related to what? Joint operation and business combination. That question has been added in business combination. So when I will do business combination discussion, so we'll take that question. That is very much expected. So with this, all the expected question of consolidation has been taken into consideration. So there are 3 main questions. From that 3 question, actually 1 question will be asked. That is my intention. Means that is actually my expectation that out of that 3 question, whatever I've discussed at the beginning, out of that 1 question is going to be asked. I hope you have understood all the discussion. Understood? Bolo. So for today, this much only. Once again, we'll meet in the next video with business combination chapter. The business combination chapter is very important for this attempt. Means I am expecting 1 question from business combination. Correct? Okay. Thank you very much for today. Till then, bye bye. Take care. Enjoy your remaining day. Enjoy your preparation. Bye bye.